Diamond Dave to find out the highest paid part-time job in the world options training course. And what we're going to talk about is FedEx, right? So FedEx is a, logistics company. They operate in the United States, but they also operate internationally. I personally believe that FedEx is getting set up to be a really, really good short, or maybe even somebody, if you're in the options game, to get put contracts on. And I'm going to kind of show you what I'm seeing in FedEx and how this could be set up to be a really, really good play. This is not going to be investment advice. This is just going to be my own analysis. You need to do your own analysis. But what I'm going to do is kind of show you, just give you a sample of kind of like how I walk through a company and how I teach my options traders to really look at a situation, look at a scenario, and kind of understand how you want to attack it. So what I'm kind of giving you is a preview of what I teach people inside the course, but it's going to be a little bit different than what you normally may see on YouTube, because we don't do a lot of company cheerleading. We don't do a lot of CE cheerleading. I'm a fan of making money. I'm not a fan of any individual company. I'm not a fan of any individual CEO. To me, they're pieces on the chessboard. But what I'm a fan of is making money. So if you're watching this video, you need to be watching from the concept of how can I take what David is talking about in this particular course or this particular video presentation, and how can I implement that into my program to make me some money? And whether you like or don't like, or bullish or bearish on the company, that's not relevant to the scenario, right? So your personal feelings about FedEx are not relevant. What is relevant is that can you take some of this information and implement it into your program and utilize it to make some money from it? So let's go ahead and get into it. So we're looking at FedEx. We're looking at their chart. Now, what I want to do is look at some of the key things that are going to jump out on their chart. We see that FedEx around 1/16/2018 was trading around 274, and it started at what I call leg down. Now I'm looking at a 2-year chart with the intervals at 1 week, excuse me. And what we're seeing is at around 12/3/2018, we're seeing a massive sell-off, right? So anytime I see something like that on a chart, what I do is I try to say, well, why did this happen? Right? What made it? Because these red bars are representing a week. So this is a red week for them. This is a red week for them. This is a red week for them. So it went from an open of 232. It closed at 201 that week. But at the end of this sell-off, it was at 158. That's a massive sell-off. Now, what I do to try to kind of, a lot of times when I'm looking at this on the chart and I want to kind of understand where it went, is a lot of times what I do is I go to Google and I type in, right, that particular time period. So we know it was in December 2008. So I go to Google, type in FedEx stock, and I just do a search for that time period. So we got from November 30th, 2018 to January 2nd of 2019. So it covers the range of that particular time period of that sell-off. And I look up articles of why FedEx stock dropped, right? And now you can kind of get an understanding of what's going on this chart. Then we see that, it went down, and it kept essentially legging down. So you get higher lows. So each time it goes up, it closes a little lower. We get another pop-up. It closes lower, and it kept scaling down. Then what do we have here? We have the COVID scenario. So we know pretty much every chart shows this sell-off of COVID. Then it started to move out of the COVID because why? Everybody was doing delivery because nobody really could go to the stores. A lot of people decided to stay in their house because they was worried about COVID. So shipping became, and delivery services became a lot more valuable. Then we see it starting to go up. Now let's go to the 1 year. Now we're going to go to daily charts on the 1 year. And they issued the earnings around $300. And then what we saw FedEx do was sell off really, really hard. It stopped at around 235. And then now it started to work its way back up. So what we're seeing on the 2 year, let's go back to the 2 year, is that, let me zoom out. We're seeing on the 2 year is that we got around 274. We saw a sell off from there. 264, we saw another sell off. And then we got around this 247, 250 area, sold off hard. And a lot of that had to do with issues with tariffs, rising cost, FedEx putting out a lower guidance, and things of that nature that kind of got it to sell off some of these highs. So when you're looking at a chart and you're seeing a lot of downward selling pressure, that's sustainable. So we're looking, like I said, this was a week. These are weekly charts. And we see over the course of 2 to 3 weeks, it sold off really hard and got all the way back down to 158, even though it started at 232. That's a massive sell-off. You want to investigate through news articles and kind of understand, why did that happen? Was it something just purely technical, or was it something fundamental, or was it a combination of fundamental and technical that caused it to sell off? Okay. Now that we see it coming out of COVID and rising back up, getting around 300 and selling off really hard again, right? These are weekly candles. So we got 1, 2, 3, 4, 5 weeks of it being red. And I remember when this happened, right? And where it stopped around 235 and now it started to walk its way back up. So now the question we want to ask ourselves is that we are seeing historically pretty much over the past 2 years, when FedEx gets a little bit north of 260, it starts having issues sustaining that price point. And we're seeing over a 2-year span. So we've had multiple changes in the economy. The first sell-off was pre-COVID. Now, what was happening pre-COVID to FedEx was, one, they're in a lot of competition with Amazon. Now, 2019, FedEx and Amazon discontinued their relationship because because they got planes, what they were doing, the air freight for Amazon, they've discontinued that relationship. And Amazon really, if you really understand kind of the space, they are attacking FedEx. They want to take FedEx market share. They want the retail customers and some of the business customers that are using FedEx as a shipper or as a logistics company, they want them to come over to Amazon. So what Amazon a lot of times is doing is they're putting their fulfillment centers in the same geographical area as FedEx because they want to show people that they can outperform FedEx. And so one of the reasons why FedEx was under a lot of strain in the later part of 2019, we're seeing here, right? Why they were under a lot of strain is because their earnings, we see this slide down, is because their earnings reports were not looking that great because of their issues with Amazon. There was one earnings report that was late right before COVID hit, in which I listened to it, and the brass or the executives or the C-suite of FedEx, they really couldn't answer any questions about how they were going to deal with this new competitive space that they were in with Amazon. This is when FedEx sold off really, really hard. And so what I want you to understand is that the question I have is, how is FedEx going to deal with Amazon in the future? Because even though they picked up a lot of business because things changed because of the environment and because of COVID, as more and more people get vaccinated, as things kind of not necessarily get back to normal, but as they kind of get back to where they were before because of vaccinations and because of people returning back to their normal lives, how does FedEx now go to dealing with the issue of Amazon and how the fact that Amazon kind of wants to run them out of their area? So let me give an example of what I'm talking about. So we have this article from the Daily Memphian, right? And this is why reading is so important. So it's on March 31st. FedEx announces new initiatives to attract and retain workers, right? So the article talks about FedEx is increasing the Memphis hub night side pay premium. So now Memphis people are going to earn around $20 an hour. Effective April 11th, it's going to give a $100 bonus for any Memphis operation hourly employee who refers somebody that's going to stay for 90 days. They're also doing tuition assistance. Now, one of the reasons why they're doing this is that in this particular area, Amazon announced that it's going to build a third fulfillment center in the Memphis area to handle its package distribution. So what is that going to do? A lot of times the same pool of people that work at FedEx is the same pool of people that's going to work at Amazon. So now FedEx is competing with Amazon for that pool of workers. So now what FedEx has to do is incentivize that pool of people to come work for them as opposed to working for Amazon. So we talked about before, Amazon wants to essentially push FedEx off the map. And they're going to do it in a lot of different ways. But they've shown, and this was happening before COVID, that they have Amazon has FedEx in their targets, and they pretty much want to just take all of their market. And the question I have is that if Amazon continues down that road, how do we support, can FedEx support higher and higher prices? Okay, so we're seeing that after they did this earnings and they were around $300, they sold off real hard around the $235, and then they started to build back up and they had another earnings after that. But they sold off really hard. We're looking at 12.7 all the way down into 125. So that's over a month of selling. And literally, if you watch FedEx during this time, they just got lower and lower every day. So a lot of funds pulled out of FedEx over this time period because they didn't believe that FedEx could justify this $300 price. However, this is what I want you to understand. FedEx price targets are north of 300 for most analysts, and we're going to go into that. So what's very interesting is that a lot of analysts have issued out price targets north of 300, even though we're seeing that FedEx can't support those particular prices from a chart standpoint. And as we start to roll back to some level of normalcy because of vaccinations, if Amazon resumes trying to take all the market share from FedEx, what's going to change about FedEx that's going to make them and have them the ability to compete in this space? Because we saw pre-COVID, Amazon was hammering FedEx and trying to push them out of different marketplaces and essentially take all the market share from them. Now, what I want you to do is look at their earnings per share from 2006, 2020. We saw from 2019, annual earnings per share was 203. That was an 87.91% decline from 2018. So now what you want to do is you want to go research their earnings in 2019 and understand, why do we have a decline? Was it fundamental? Was it just technical? What happened in the market to where we saw a decline in earnings per share? Then what we saw was that in 2020, right, earnings per share was 4.9, a 141 increase from 2019. Now we see that earnings per share for 12 months ending November 30, 2020 was 920, and that's a 2,000% increase year over year. Now, why do we know that? One of the reasons why that took place is because, like I said, delivery went crazy because of COVID. So to me, a lot of times that the 2020 growth, right, of FedEx is abnormal because you had a condition in the marketplace that really drove a lot of growth, but none of that growth was going to be sustainable, right? However, like we talked about before, we have price targets, right? And this is why FedEx stopped. So I looked that up, why FedEx dropped today. So when I was looking at, so let me do a hard stop. And I was saying that when I saw on the chart that they sold off real hard, I looked up why they sold off. And then I went to an article that kind of explained why they sold off, and it kind of gave me some reasons so I can understand that. So let's go back to the price targets. So when we're looking at FedEx, their price targets for the next 6 to 12 months, what we're seeing is that a lot of analysts, right? And you can kind of click on this. So at marketwatch.com, when you look at their upgrades or downgrades, you can click on it to get more info. What we're seeing is that currently we have 18 buys. It's considered overweight. And I want you to Google what overweight means in relationship to a stock price. We got 18 people issuing out a buy, 3 saying it's overweight, 7 saying it's a hold, 1 saying it's underweight, 0 saying sell. A month ago, we had 17, 4, 7, and 1. 3 months ago, we had 18, 4, 6, and 1. Right? We have the stock price targets. The high is 383. We got a median of 340. We got a low of 250. We got an average of 337, with the current price being 284. So now if the current price is 284, but we have a 12-month price target of 383. But on the chart, what we're seeing is that when this thing gets to around 300, it's sold off. Over the 2-year, we got around 274, it started selling off again. Now, we understand that there were factors in the market that impacted that. But we're seeing that on a chart standpoint, FedEx really can't support $300. However, we're getting price targets that are saying that we got a price target of 383 as a high, 340 as a median, 250 as a low. Okay. Now we can also go to Benzinga and we can look at analyst ratings on FedEx. So research firm Vertical Research, they got a coverage. They got a buy on FedEx. They got 340 as a price target. Goldman Sachs on 319. They got a buy. They got a 365. Right. These are all north of 300. Raymond James has an outperform. They got a 310. Credit Suisse got an outperform. They got a 350. Now, those are all the 2021 price targets. They're all in the 300s. Now, this is what you got to understand when these big banks or these big firms issue out these particular price targets. Many times they have a position, or their customers have a position in these particular companies. So if they may issue out a bullish price target because they want it to go up, and they understand that, you know, especially Goldman Sachs and even sometimes Credit Suisse, they can be very influential in the overall market. So they can issue out a very bullish price target, which can cause other firms to feel, you know what, we feel comfortable about going in on this. However, you have to understand is that they may be bullish on it because either they're in a position in it or they have clients that have a position in it. And then a lot of times they're not going to be bearish on it until they sell, they get out of their position, or they get their clients out of the position, and then they issue out some type of bearish coverage. However, you got to understand is that why are people issuing out price targets that are well over 350? Oh, I'm sorry, well over 300. What is going to happen in the market to get this thing to continue to move up, but not only move past 300, to keep moving and to hold that price? Because what are we seeing on the chart? FedEx could not hold 300. So my analysis of FedEx is this. They may hit 300. They may hit 320. I don't think they're going to be able to hold it. And I need to see what's going to happen in the market that's going to allow FedEx to hold those price points. Because like I said before, is that I believe Amazon is going to continue to come after them and try to take more and more market share from FedEx. Because I tell you, and a lot of people are forgetting this because they weren't really paying attention to it. This 2019 going into 2020, Amazon was killing FedEx. They were literally trying to run those guys out of here. And as a result, FedEx share price was going down is what you're seeing here. Now, were there other implications? Yes, there was Trump talking about tariffs with China, things of that nature that we thought was going to impact their international game. But one of the biggest things that they had to worry about from a threat standpoint was Amazon. I don't believe that that's going to stop. And I don't believe that the gains that they made during COVID are going to be sustainable, because we're not going to have as much as a demand for delivery once everything low key gets back to normal. So a lot of the retail customers that they picked up may go now to doing normal business. So they may have a mix of retail and online and e-commerce delivery. Therefore, some of that revenue that they were getting may start to bleed off over time. Now, here's something else that you want to factor in. If we believe that energy costs are going to get higher because the energy market is going to go higher in the summer, how is that going to impact a logistics company like FedEx, where they're pretty much their main game is logistics, and they're primarily doing that using gas-powered vehicles, whether it's planes or some type of combustible engine, right? Trucks, cars, vans, Sprinter vans, things of that nature. So if the energy costs start to go up because the energy market gets hot because of the summer, then how is that going to affect FedEx? So then if we combine rising energy costs also with the competitive Amazon, that really can start to hammer their revenue and also start to hammer their bottom line and start to affect their earnings per share. So another thing that I will look at is that I will look at something like crude oil. I would take a 2-year chart and I would try to find out, is there any correlation between oil prices going up, right? Or the oil market getting higher? I would also look at maybe Brent crude. Is there any correlation between this oil market going up, right, and FedEx chart going down? So let's say we get 6 months of increase activity in oil. Do we now see the next earnings for FedEx being lower? And you want to kind of see, can you get any kind of historical correlation between the two? And then we can maybe now anticipate that either yet rising energy costs are going to affect the bottom line of FedEx, or maybe it doesn't really have an impact because maybe FedEx has relationships with gas suppliers where kind of like they may have a price locked in over the next 6 months that kind of offset those increasing costs. So let me give you an example. When I used to buy gas in Georgia, because pretty much in the Atlanta area, everything's gas powered, you could essentially pay an upfront fee on gas to where even if the price rose up, you was already locked in at that price. Now, if the price went down, you was still locked in at that price, but you could lock yourself in at a price to where you didn't have to worry about an increase in natural gas. So FedEx may have those type of relationships from an energy standpoint to where their providers of energy, they may be locked in to offset a spike in the energy market. These are the kind of things that you want to look at. So this may seem like a lot, but this is pretty much all brain power. OK, not a lot of physical labor. However, if you want to make money in the market, you got to be willing to do this type of stuff. You can't just watch a YouTube video and think that somebody is going to tell you what stocks to buy. You got to be willing to go in and start digging into this information and kind of understanding, can you find seasonality? Does FedEx report well a certain time of the year, but maybe another time of the year they don't report well? So then during the time of the year that they normally seasonally do not report well because of the marketplace, and they have something that can impact them negatively, do we think that now they're going to start to sell off because people already know that, you know what, well, they already don't do well this time of the year because of seasonality, and this is also impacting them. So that now this is a good time for us to get out of this position and wait to come in at a later date. And the only way that you're going to find it out is to start looking at a lot of the charts and kind of understanding what is going on in the overall marketplace, macro, that can affect this company from a micro level, right? So this is the kind of stuff I teach my options traders to do. It's not difficult once you develop a process and a system to do it, but it is very much a lot of brain power. And because we live in a world where we're not really tasked a lot of using our brains. This seems like a lot of work because we're in a world where a lot of times we're tasked with doing a lot of physical stuff. Okay. However, you can do this. It is something that you can perform. You just got to get into a routine of doing it. Start asking yourself these kind of questions in your mind, and you'll start to see this in your overall outside economy, you know, and ask yourself these questions. Well, I'm observing this. How do I think that's going to impact the market for this particular company? Well, I see this going on in the world. How do I think that's going to impact the market for this particular company? And start asking yourself these kind of questions over and over again. You'll start developing answers. And then as you see the market starting to move, you'll start to develop the confidence that you can analyze these scenarios. Because I'm here to tell you, these people are not really analysts, right? So these people are not really analysts, right? They really have a lot of times have a position in these companies, and they're putting out a price target that is going to support their position. It doesn't mean we discard what they say, but we understand how they're incentivized. They're not really giving an analysis based on where they really think this thing is going. They're giving an analysis based on what's the best for their particular firm and what's going to be the best for their clients. Now, it will impact the company because especially Goldman Sachs, they can move the market, right? Goldman Sachs, JP Morgan can move the market, right? They have that ability. They have that much power in the market. But it doesn't mean that they're right and you're wrong. And my goal is to develop your confidence and develop your analytical ability and develop your forecasting and your modeling ability to where you can now analyze and forecast on your own. But to develop that ability, you have to start doing it. You won't develop the ability just watching other people do it or sitting on a 2-hour video while somebody talks about a company for 2 hours. You got to get into the field and start doing the work, and then you'll start to develop that ability. So I wanted to show you really quickly like how I teach my options traders how to really break down a fundamental and a technical analysis to kind of understand how to play this. This could be a really good yearly play. So you could essentially make this one of the companies that you trade over the course of the year because we're seeing it come out of this new low. And so we want to try to determine, is it going to come out of this low and continue to go up? Is it going to consolidate, or is it going to sell off? Because what we're seeing is that it come out of this low. It's not consolidating at all. It's building back up. Right, which is really, really unusual. So you're not seeing any consolidation. You're seeing just a U slope of it coming right up out of here. This could be a good play for the next, 6 to 12 months if you want to just focus in on one company. And once you kind of understand what's going on with this company, you can make this very profitable because we're talking about a company that is not super liquid, but it's fairly liquid. You got a 1.4 volume, average volume of 2.6. So you want to look at the options contracts, kind of understand what price points they are, and then also understand they got a next earnings date on June 4th. So that's going to be a real big date, in my opinion. That's going to kind of tell us what direction they're going in, not only the earnings, but also the guidance. Now, if you want to learn how to take information like this and utilize it to make money for you and your group, reach out to me about the highest paid part-time job in the world options training program, because this is what I give you the ability to teach. And from this, you now start to be able to increase your probability of trades because you understand what is actually going on inside the company, but not only the company, what is going on inside the larger market. So what I want to try to discourage you from doing is waking up in the morning and playing something just because it might be hot that day. Get an understanding of what's going on in the overall market, what's going on inside this company, how they're going to impact each other, right? And then now you start to understand how to create high probability trades, right? Then we talked about before, get your percentages down and then also get your position size down. And you're going to put yourself in a position to make a lot of money in this market. And you have the ability to do this. OK, you do not have to go to school and study finance for 10 years to learn how to trade. You got to learn how to trade, right? Which is something that they can't teach you at an academic institution. So if you got any questions, reach out to me about the highest paid part-time job in the world options trading program. Reach out to me about the IPO course. The links will be in the description. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.